Hey guys, welcome back to a brand new video. I'm RexFinance, and today we have to discuss why I believe the stock market rally is going to resume in relatively short order. On this YouTube channel, it seems like I'm always making videos contrarian to what most YouTubers are talking about at any given point. Whenever most of them are bullish, I make a bearish video, and when most of them are bearish, I end up making a bullish video. And obviously lately, the bearish videos have been piling up on YouTube. And that's part of the reason today why I'm making a bullish video. I honestly do think this market rally is going to resume in relatively short order based on a couple of different things. But let's review really quickly what has happened over the past month or so. We all saw it. It was a great rally in the NASDAQ from lows. It was up almost 22%, almost 23% at its peak. But just over the past week or so, the markets have really cooled off, and the NASDAQ is already almost retraced 6% to the downside. But what's most intriguing to me personally is the fact that yesterday and today, between those 2 days, the market, especially the NASDAQ, has been pretty flat, down only 0.39%. And this tends to happen whenever both buyers and sellers are happy. It's very rare. There's usually a bunch of different things going on in the economy and in the stock market, companies reporting earnings, companies coming out with disappointing news, exciting news that are always constantly tipping the scale in the stock market, making it go up or down one way or another. And it's very rare we get back-to-back flat days in the stock market, but that's pretty much what we've gotten to start this current week. Now, what breaks the cycle of flat days is usually a catalyst, bumping that scale either one way or the other. But I do think we all realized after a 23% rally in the NASDAQ that things had to cool off eventually, because that 23% was all done basically within 30 days. That is a ridiculous rally. That is almost 2 years of returns in 30 short days. We all knew a cool off was coming, and I personally made an entire video dedicated to this, how I felt that this cool off was going to happen. The stock market is a trap. Sell everything was the title. I know it's kind of clickbait, but I call it marketing. If you missed that video, I'll make it really easy for you. Just hit the I in the top right-hand corner to go watch that video, or go down to the description below, click the link, and go watch that video. I highly recommend it. It's a very important video. And also, if you guys are new here, returning and not yet subscribed, I would greatly appreciate a subscribe button down below. Without further ado, let's go ahead and jump into the meat and potatoes of this video. So within the next few days, I believe there are a couple of different catalysts that are going to sway the market either to go higher or to go lower. Again, this gridlock we're seeing to start this week is not going to last long. We're either going to go lower or we're going to continue this rally higher in the stock market. And the first catalyst is happening tomorrow. This is something that I think everybody should be paying attention to, and that is Nvidia's earnings report that come out after the bell tomorrow. The reason this is such a huge deal is not only because this is a multi-$100 billion company, but also because this has the potential to sway the NASDAQ, which can sway the entire stock market and make the entire stock market kind of have a rejuvenation. Now, if you'll think back a couple of weeks with me, you'll remember that Nvidia released preliminary earnings. Generally, when a company does this, they have bad news to share, and this was no exception for Nvidia. They reported that they expect second quarter revenues to come in at $6.7 billion versus their own outlook, not even analyst outlook, but the company's own outlook that they put out in May of $8.1 billion in revenue. They also stated that they expect the second quarter results to include approximately $1.32 billion of charges, primarily for inventory and related reserves based on revised expectations of future demand. Ouch. And you can see they kind of break this down in a handy little chart for us to look at. You can see their comparisons for their Q2 outlook versus their preliminary results that they put out a couple of months ago. And really the only positive thing we see here is the fact that their operating expenses on a GAAP basis are going to come in at, what would that be, $30 million or $40 million less than they expected in their outlook. But other than that, this was really, really disappointing, and shareholders definitely priced this in almost immediately. We can see if we go to the stock chart, when this news came out, the stock within 2 days dropped 10%. And again, this is a $430 billion company as it stands today. So a 10% drop is what, almost $50 billion of market value just erased within 2 days. So I know some people are going to call me crazy thinking that Nvidia is going to move up on their earnings report because we already know that their earnings are terrible. And this is where I think most retail investors get burned when they are trying to trade stocks. They forget that the market is always pricing things in and that the market always has a tendency to overreact to any reaction it makes in the stock market, whether that's to the downside or the upside. But the bottom line is, if people are saying this is going to go lower because we know this, it probably means the markets have already priced in that bad news because we already know what that bad news is. And either consciously or subconsciously, investors accurately represent that in the share price of whatever equity we're talking about. It's the same thing that I see happening right now in the stock market. Everybody is saying things have to go lower because housing sales are bad. Things have to go lower because of A, B, and C, or 1, 2, and 3. All of these different reasons things have to go lower. But they forget that the markets have probably priced those things in if we're already aware of this bad news. It takes new bad news to send prices lower. So sure, Nvidia could come out with more bad news that the markets aren't already aware of tomorrow in their earnings report, and the share price could fall. But I find that to be unlikely, which is why I've actually purchased some options in Nvidia stock in anticipation of their stock price going up after their earnings report, because again, I believe this reaction to their earnings was an overreaction, which is what the stock market likes to do. So in my eyes, the markets are already probably well aware of all of the faults Nvidia has and all the issues they're having now, and whatever reaction the markets have to Nvidia's earnings tomorrow is going to be directly as a result of the outlook and guidance that Nvidia puts out. I personally believe that Nvidia is going to put out better than expected guidance and projections, and as a result, see the share price climb quite significantly. All right, now for the second catalyst that I think is going to bump the markets either up or down, and this catalyst is the most likely to have the biggest impact on the markets. Some of you may not know, but Fed Chairman Jerome Powell actually is speaking this week on Friday. We did not have an official Fed meeting in the month of August. We have our next official Fed meeting in September, but Powell is speaking on Friday, and it will have implications for the markets. Now, I for one believe the markets are going to have a positive reaction to this Jackson Hole meeting. This is what the Fed meeting is called this month. I know it's not an official Fed meeting, but it is basically a Fed meeting. I think it's called an imposium or something like that, some fancy word. But the reason I think that is not only because the markets have already cooled off quite a bit from their most recent rally, but also the fact that if you simply Google search Jackson Hole and read through all of these news articles, you'll find not a single one of them is bullish. Not a single one of them has a positive outlook on this meeting. In every single article, especially focused on this Bloomberg headline here, hedge funds build up big short betting on hawkish Jackson Hole. They are betting, hedge funds are betting that the markets are going to go down as a result of this Jackson Hole meeting. You can scroll through, like I already said, all these different articles and see a bunch of negative opinions and outlooks and guesses on what the markets are going to do as a result of this meeting, which, as I discussed at the beginning of this video, the markets tend to do the opposite of what most people think they're going to do because the market is always pricing things in. And if everybody is negative on the Jackson Hole meeting, they've probably sold out of their stocks in anticipation of this Jackson Hole meeting, which only leaves buyers because the people that wanted to sell have already sold even before the meeting took place. And I think this meeting is probably a big reason why the markets have been kind of gridlocked here during the first 2 trading days of this week. They see this meeting upcoming, they know the implications it could have, and ultimately, we're waiting to see what Fed Chairman Jerome Powell will say. I personally believe that Powell is not going to be as hawkish as people think. I don't think he's going to be a dove either. I think he's going to be somewhere in the middle. But again, better than the markets currently expect. I believe Fed Chairman Powell to come out and say that he is content with the job the Fed has done up until this point. And he believes that the bulk of the work the Fed has to do is now behind them. I believe he is going to say that they are looking at economic data, which, by the way, if you've missed it, is pretty negative, and they believe they have done the bulk of their job. You have to remember, with inflation, The Fed can control basically a third of that equation, which is the demand. They can suppress demand, but there's still 2/3 of inflation that's pretty much uncontrollable by anybody. So although I'm sure Powell isn't going to go as far as saying he's going to start cutting rates as the economic indicators fade, I do believe he's going to say we don't see very many rate hikes in front of us at this point. I do believe he's going to say we are going to have this elevated interest rate until inflation goes down to the 3 to 3.5% level. At that point, if the economy is in need of some help, we can then start cutting some rates. But there's also another important dynamic at play here. You have to realize when the Fed raises the federal funds rate, it is hurting the government itself because of all the debt the government has outstanding. When the federal funds rate goes up, the government has to make increased payments on their outstanding debt, and the only way they can do that is by printing more money to pay off that debt. So raising rates, in a sense, is kind of counterintuitive and doesn't make much sense because if you raise rates, they have to print more money to pay off their debt, which causes more inflation, which is why you are raising rates in the first place. And the reason I believe Powell is going to come out and say that he thinks the Fed's work is largely behind them at this point is pretty cut and dry. I mean, everybody's seen it. The economy is starting to dry up. Whether that's, retailers, every single retailer that reported earnings, I apologize. I just hit my mic. I apologize to any headphone users if that was loud. But any single retailer, Walmart, Target, Nordstrom, any single earnings report you look at from any retailer out there talks about a huge inventory glut. And how do you get rid of inventory? You cut prices, you run promotions, you run discounts, you run sales. That's how you get rid of an inventory glut. Price cuts, which is, let me hear it, deflationary. Yeah, you did it. We also have commodity prices that have largely been falling over the past month or 2 months. When commodity prices come down, that is ultimately a good thing and again puts deflationary pressure on the economy. Deflation is something that I've been talking about on this YouTube channel for a very, very long time, and people thought I was crazy when I was talking about it 4 to 5 months ago, maybe even 6 months ago. People thought I was crazy, but it's here. Deflation's here in many different categories. When the price of oil and natural gas comes down, it makes public transportation cheaper. It makes profits go up from companies. It gives consumers more money left over in their wallets to spend in the economy. Commodity prices coming down are largely a good thing, and you have to realize I come from a farm family. I don't want to see corn and soybean prices fall necessarily because high prices are good for my family business, so I'm not biased here. But commodity prices are falling, and that is deflationary. That is demand suppression that the Fed has caused in the economy. Also, if you're watching this video, you've seen your stock market portfolio value probably almost be cut in half at this point, maybe even more than that. Well, there's a thing called the wealth effect, where when your stock market portfolios are at all-time highs or your home value is at all-time highs, people tend to go out and spend more money. However, stock market portfolios have dropped. Existing home values have started to drop. New home sales are starting to cool off. All of this is demand suppression causing deflationary pressure. The Fed has done its job suppressing demand largely. Now, yes, there's more of this that they can do, and I don't expect that they're just going to halt interest rate hikes now. I think we're probably going to see another 50 basis point hike and then maybe another couple 25 basis point hikes. But I don't think it's going to be nearly as bad as the markets are currently anticipating. To quickly back up everything I just said, U.S. house values fell for the first time since 2012, according to Zillow, and gasoline prices in the U.S. have fallen for 70 days straight, the longest down streak since January 2015. And then lastly, we got news this morning that U.S. new home sales tumbled to 6.5-year low. Prices are still high, but they will eventually have to come down even further in order to meet that equilibrium in the markets between demand and supply. Econ 101, I'm sure everybody's well aware of that. So in conclusion, I believe there are a couple of big catalysts this week that could move the markets in either direction. If I'm wrong and Fed Chair Powell comes out way more hawkish than the markets currently anticipate, which would be hard to do, by the way, the markets are going to fall. That's plain and simple. The markets are going to fall. And then if NVIDIA comes out with new bad news that the markets weren't already aware of, Nvidia is going to fall and likely tank the NASDAQ, tanking the rest of the stock market. But I personally believe since bad news has been priced in for both of these big catalysts that are coming up in the next few days, that the markets are going to resume this rally and people are going to be very, very confused, just like they were during the 23% rally that we just had in the NASDAQ. We have not seen total capitulation of bears yet, which leads me to believe this rally is just getting started. As a matter of fact, I personally believe right now there are more bears than ever doubting this stock market rally. People are saying, after this last 6% decline in the stock market, oh, see, look, we were right all this time. The market's stock prices are going to fall right back down to lows. We've been right this whole entire time. And it's going to take that next leg up in the stock market to really capitulate those bears, to get them to buy into this rally. But as I've been saying on this YouTube channel several times, those people are going to be buying into the rally when prices in the indices are 25 to 30% higher than they were at the bottom. That sort of stuff just drives me crazy. I've made enough videos talking about that. But guys, right now, just buy stocks. Not financial advice, but just buy stocks. We only see valuations like this a few times in our entire lifetime. Do you really want to waste this opportunity sitting on your hands thinking that the markets are just going to go lower? Absolutely not. That makes no sense. But anyways, as a result of my thoughts here, I obviously have already made my play on Nvidia. They have their earnings report tomorrow. Hopefully I make some money on that play. If you guys want to see that play I made, join my membership by hitting the join button down below. If you don't find value, I'll refund you up to your first month as a part of the membership. I have yet to have anybody ask for a refund. If that's a tiebreaker, I'd love to see you join the Discord server. Also, I'll probably be making a move in the NASDAQ or small caps in particular on Friday leading into this Jackson Hole meeting. I think both events are going to be bullish. If you want to see what move I end up making, also join the membership down below. You'll be able to know what move I'm making. Without further ado, I hope you guys really enjoyed this video. Again, if you guys are new here or returning not yet subscribed, please subscribe down below. Have a great rest of your day. Stay blessed. Keep your head up. 10 toes to the ground, your chin up. Peace out.